Warren Edward Buffett is an American business magnate, investor, and philanthropist. He is currently the chairman and CEO of Berkshire Hathaway. He is considered one of the most successful investors in the world and has a net worth of over $100.6 billion as of April 2021, making him the world's seventh wealthiest person. But he didn't get there overnight, and the story of how he got there is what we are going to talk about today. Buffett was born in 1930 in Omaha, Nebraska, the second of three children and the only son of Layla and Congressman Howard Buffett. He began his education at Rose Hill Elementary School. In 1942, his father was elected to the first of four terms in the United States Congress, and after moving with his family to Washington, D.C., Warren finished elementary school, attended Alice Deal Junior High School, and graduated from Woodrow Wilson High School in 1947, where his senior yearbook picture reads, "Likes math, a future stockbroker." In one of his first business ventures, Buffett sold chewing gum, Coca-Cola bottles, and weekly magazines door to door. He worked in his grandfather's grocery store. While still in high school, he made money delivering newspapers, selling golf balls and stamps, and detailing cars, among other means. On his first income tax return in 1944, Buffett took a $35 deduction for the use of his bicycle and watch on his paper route. As a high school sophomore, Buffett and a friend spent $25 to purchase a used pinball machine, which they placed in the local barbershop. Within months, they owned several machines in three different barbershops across Omaha. They sold the business later in the year for $1,200 to a war veteran. After finishing high school and finding success with his side entrepreneurial and investment ventures, Buffett wanted to skip college to go directly into business, but was overruled by his father. Buffett displayed an interest in business and investing at a young age. He was inspired by a book he borrowed from the Omaha Public Library at age 7, 1,000 Ways to Make $1,000. Buffett's interest in the stock market and investing dated to schoolboy days he spent in the customer's lounge of a regional stock brokerage near his father's own brokerage office. On a trip to New York City at age 10, he made a point to visit the New York Stock Exchange. At 11, he bought 3 shares of Citi's Service Preferred for himself and 3 for his sister Doris Buffett. At 15, Warren made more than $175 monthly delivering Washington Post newspapers. In high school, he invested in a business owned by his father and bought a 40-acre farm worked by a tenant farmer. He bought the land when he was 14 years old with $1,200 of his savings. By the time he finished college, Buffett had accumulated $9,800 in savings, about $107,000 today. In 1947, Buffett entered the Wharton School of the University of Pennsylvania. He would have preferred to focus on his business ventures, but his father pressured him to enroll. Warren studied there for 2 years and joined the Alpha Sigma Phi fraternity. He then transferred to the University of Nebraska where at 19, he graduated with a Bachelor of Science in Business Administration. After being rejected by Harvard Business School, Buffett enrolled at Columbia Business School of Columbia University upon learning that Benjamin Graham taught there. He earned a Master of Science in Economics from Columbia in 1951. After graduating, Buffett attended the New York Institute of Finance. The basic ideas of investing are to look at stocks as business, use the market's fluctuations to your advantage, and seek a margin of safety. That was the philosophy taught by Benjamin Graham. 100 years from now they will still be the cornerstones of investing. Buffett worked from 1951 to 1954 at Buffett Falk & Company as an investment salesman. From 1954 to 1956 at Graham Newman Corporation as a securities analyst. From 1956 to 1969 at Buffett Partnership Limited as a general partner. And from 1970 as chairman and CEO of Berkshire Hathaway Incorporated. In 1951, Buffett discovered that Graham was on the board of Geico Insurance. Taking a train to Washington, D.C. on a Saturday, he knocked on the door of Geico's headquarters until a janitor admitted him. There he met Lorimer Davidson, Geico's vice president, and the two discussed the insurance business for hours. Davidson would eventually become Buffett's lifelong friend and a lasting influence, and would later recall that he found Buffett to be an extraordinary man after only 15 minutes. Buffett wanted to work on Wall Street, but both his father and Ben Graham urged him not to, And even though he offered to work for Graham for free, Graham refused. Buffett returned to Omaha and worked as a stockbroker while taking a Dale Carnegie public speaking course. Using what he learned, he felt confident enough to teach an investment principles night class at the University of Nebraska, Omaha. The average age of his students was more than twice his own. During this time he also purchased a Sinclair gas station as a side investment, but it was unsuccessful. In 1954, Buffett accepted a job at Benjamin Graham's partnership. His starting salary was $12,000 a year, about $116,000 today. There he worked closely with Walter Schloss. In 1956, Benjamin Graham retired and closed his partnership. At this time Buffett's personal savings were over $174,000, about $1.66 million today, and he started Buffett Partnership Limited. In 1959, the company grew to 6 partnerships and Buffett met future partner Charlie Munger. By 1960, Buffett operated 7 partnerships. He asked one of his partners, a doctor, to find 10 other doctors willing to invest $10,000 each in his partnership. Eventually, 11 agreed, and Buffett pooled their money with a mere $100 original investment of his own. In 1961, Buffett revealed that 35% of the partnership's assets were invested in the Sanborn Map Company. He explained that Sanborn stock sold for only $45 per share in 1958, but the company's investment portfolio was worth $65 per share. This meant that Sanborn's map business was being valued at -$20. Buffett eventually purchased 23% of the company's outstanding shares as an activist investor, obtaining a seat for himself on the board of directors, and allied with other dissatisfied shareholders to control 44% of the shares. To avoid a proxy fight, the board offered to repurchase shares at fair value, paying with a portion of its investment portfolio. 77% of the outstanding shares were turned in. Buffett had obtained a 50% return on investment in just 2 years. In 1962, Buffett became a millionaire because of his partnerships, which in January 1962 had an excess of $7,178,500, of which over $1,025,000 belonged to Buffett. He did it. He was a millionaire. This feat took him 6 years to accomplish from the moment he started his own company, Buffett Partnership Limited, in 1956. Buffett invested in and eventually took control of a textile manufacturing firm, Berkshire Hathaway. He began buying shares in Berkshire from C. Barry Stanton, the owner, whom he later fired. Buffett's partnerships began purchasing shares at $7.60 per share. Buffett took control of Berkshire Hathaway at a board meeting and named a new president, Ken Chase, to run the company. In 1966, Buffett closed the partnership to new money. He later claimed that the textile business had been his worst trade. He then moved the business into the insurance sector and, in 1985, the last of the mills that had been the core business of Berkshire Hathaway was sold. In 1979, Berkshire began to acquire stock in ABC. Capital Cities announced a $3.5 billion purchase of ABC on March 18, 1985, surprising the media industry, as ABC was 4 times bigger than Capital Cities at the time. Buffett helped finance the deal in return for a 25% stake in the combined company. The newly merged company, known as Capital Cities ABC, or Cap Cities ABC, was forced to sell some stations due to U.S. Federal Communications Commission ownership rules. The two companies also owned several radio stations in the same markets. By 1983, Berkshire Hathaway's stock had hit a $1,000 per share milestone after Buffett spent the 1970s making a string of successful investments in stocks such as the Washington Post Company, Geico, ABC Broadcasting, and R.J. Reynolds. A year earlier, Buffett appeared in the debut issue of the Forbes 400 with an estimated net worth of $250 million. By 1983, that number had jumped to $620 million. Buffett began buying the Coca-Cola Company stock, eventually purchasing up to 7% of the company for $1.02 billion. It would turn out to be one of Berkshire's most lucrative investments, and one which it still holds. In 1985, Forbes estimated Buffett's net worth at $1 billion. After 2 decades of being a millionaire, he climbed up the ladder with his investment strategies and ideas and became a billionaire. Buffett became a billionaire when Berkshire Hathaway began selling Class A shares on May 29, 1990, with the market closing at $7,175 a share. In 2002, Buffett entered an $11 billion worth of forward contracts to deliver US dollars against of their currencies. By April 2006, his total gain on these contracts was over $2 billion. And even though he made these astounding accomplishments, his 2006 annual salary was about $100,000, which is small compared to senior executive remuneration in comparable companies. In 2008, he earned a total compensation of $175,000, which included a base salary of just $100,000. He continued to live in the same house in the central Dundee neighborhood of Omaha that he bought in 1958 for $31,500, a fraction of today's value. He was even elected to the American Philosophical Society in 2009. In 2008, Buffett became the richest person in the world, with a total net worth estimated at $62 billion by Forbes and at $58 billion by Yahoo, overtaking Bill Gates, who had been number 1 on the Forbes list for 13 consecutive years. But in 2009, after donating billions of dollars to charity, he was ranked as the second richest man in the United States with a net worth of $37 billion, with only Bill Gates ranked higher than Buffett. Buffett is a notable philanthropist, having pledged to give away 99% of his fortune to philanthropic causes, primarily via the Bill and Melinda Gates Foundation. He founded the Giving Pledge in 2009 with Bill Gates, whereby billionaires pledged to give away at least half of their fortunes. Buffett has been the chairman and largest shareholder of Berkshire Hathaway since 1970. He has been referred to as the Oracle, or Sage of Omaha by global media. He is noted for his adherence to value investing and his personal frugality despite his immense wealth. Essentially, Buffett's concentrated investments shelter managers from the short-term pressures of the market. Despite donating roughly $37 billion to charity since 2006, Buffett's net worth continues to swell overall, topping $81 billion today, to make him the world's 6th wealthiest person, according to Bloomberg. Meanwhile, Berkshire Hathaway's stock is currently valued above $320,000 per share, with a market value over $500 billion, as the company's portfolio represents a cross-section of the U.S. economy and includes some of the world's most high-profile companies, including Amazon, Apple, American Airlines, American Express, Coca-Cola, Procter & Gamble, and General Motors. That is all we have for you today. We hope you enjoyed this informative video. Don't forget to hit the like button and subscribe to our channel for more great videos like this one. Thanks so much for watching, see you next time.